traders to stay alert. And the reason why is I covered it on this tweet over here. I said it's very similar to the saying, the calm before the storm. The market participants are getting very bored at the moment. And in my experience, this is that when you should be hyper focused on the markets because something big is just about to happen. And I asked that question over here. What comes first, $23,000 or $19,000 for Bitcoin? Please make sure you let me know in the comments right now. What do you think comes first? Is it going to be up or down? And here we have our weekly chart, one of the most important. And you can see, look, so far the advantage seems to be in the bear's hands. It looks like it's rejected off of the previous weekly close over there. So at the moment, I'm giving the advantage to the bears, but we have a whole lot of things that we need to get into. Currently looking at the different moving averages and EMAs. Of course, I have mentioned up here, we have the 21 and 200 EMA, which is about to cross. It is about to cross. The cross is gonna happen over here at about 20. If exactly where the cross will take place, if price were to move back up there, that's 26,661. And then look downside, I am hoping for some sort of a bounce potentially off of that weekly range low at 20,784. If it loses that, next target comes in play at the 255 MA, which is currently sitting at 19,980. So everything is on the line. There's a lot of stakes at the moment, and we have a lot to cover. And I think everything at the moment is going to revolve around the energy prices and what's actually going on in Europe. Not only that, but this is a economically dense calendar week for the traditional markets. And I think Friday, it's all going to go down. Everything is going to take place on Friday. We're going to know exactly what's going to happen, whether it is going to be a break of the range to the upside or the downside. It could possibly even start to unfold over the course of today, which is why I titled this show that the next 72 hours will make or break you as a trader. And you really want to stay focused, stay excited, keep in tune with the market because there is much to consider. So getting into it over here, we have Christopher. He says over here that contrary to the US Eurozone inflation peak is ahead of us. In addition, it should remain elevated for longer for three reasons. Number one, explosion of power prices, and Europe's energy prices are going through the roof. We have a weak euro. We have easing of government measures to cap prices. Right now, the Eurozone inflation is artificially low. And then going on to this one over here by Alexander, he says that, let me explain the issue first. How many megawatts per hour are in 1 barrel of oil equivalent? The answer is 1 barrel of oil has 1.7 megawatts per hour. And currently wholesale electricity prices in most European countries are more than $1,000 per barrel of oil. And look, I disagree at this part. The recession will be epic. I don't know what would be epic about it, but definitely don't wish recession on anybody. Although for those with liquidity, look, it could be a generational dip buying opportunity for you. So we have some important things to cover. I thought, well, why listen to the opinions of others when you can just look at the chart of oil? And look, I think Cheds is one of the best traders out there. So I've pulled up his chart over here, and he has a Wyckoff accumulation essentially. So for those of you that don't know, essentially works like this. You have a distribution, and then the schematic will start to go through different phases over here. We had the spring, then you have the retest of that, and then you go through the next section over there where you start to reaccumulate back up, and that is essentially what oil is showing over here. So lost support came through, trough, spring, bounce off of that area, and then now we're at the peak. If it breaks through this level, then you're starting to target much higher on oil. So increase in oil is similar to, right, with the VIX, which I brought up so many times. It's almost counter trades to equities and crypto. Increase in energy prices usually means that there is troubled times for risk on assets. So keeping that in mind over there, I have this chart as well from Cheddar Flow, and he says that according to Goldman Sachs, this rally was the third biggest hedge fund short covering event in the last decade, and that happened on the 12th of August. So when you look at the markets over here, and I move the indicator to the 12th of August, look at that, the 12th of August short covering all the way up into resistance over there, rejection off there, and currently the S&P 500 futures is busy coming down. We have a confirmed deviation below that orange line, which was an important range that I'm looking at. And now it's just higher low watch. We better hope and pray that if you are bullish and you're holding crypto bags, better hope and pray that we get some sort of a bounce out of that zone. So watching that closely over there. Let's see what the NASDAQ did yesterday. NASDAQ closed red. It's still yet to deviate below the orange line over here, which I'm assuming could happen today. VIX, very important. VIX looks like it's picking up again. So VIX had a little bit of a down day yesterday, which is why crypto had some relief. But let's see how today goes. If today carries on with continuation to the upside, that is going to be tough for crypto. Very quickly on the DXY, I want to touch on this very quick. A lot of people are calling for some sort of a double top over here. So let's quickly, where is that arrow over here? So a double top over here, first top, and then, of course, they're calling for another one on this side over here. I don't personally see it that way. Look, you have it already. It's just another higher high, right? You have two candles that have already closed higher than these two on the left-hand side. So, yes, can it pull back? Definitely can pull back. Watching for higher low on this side over here, and then most likely continuation to the upside. Remember, I showed you this chart on high time frame. Let's go on to a 12-month chart. So, whole yearly chart over here. Does that look bearish to you? I don't know, not to me. Engulfing candle, engulfed all of these pretty much like, what is that? This is 12 months. So 1, 2, 3, 4, 5, 6. 6 years, the previous 6 years, it's broken out of a 6-year range that it was stuck within over that major support over there. I think that the dollar is going to continue to run. So don't try to fade the dollar. Too many people have failed trying to call the top on the dollar. Just let the trend continue. Okay, into some other news. I just thought it would be interesting to mention that DogeChain are releasing their token, so the DC token, native token, to launch on DogeChain. Now, I thought let's look at the chart because most of retail are just going to assume that if DogeChain is hyped and launching, they're probably going to buy the Dogecoin token over here. So I haven't brought this chart up for ages. I am on a high time frame here on the 3-day, and you can see straight distribution all the way down. It looks like those coins that I remember back in 2017, 2018 that were mega hyped, and at the end of the bear market, they were mostly down about 99%. So if you are looking to trade something like this or buy Dogecoin because you're a mega Elon Musk fan, pretty much see it like this, caught within this range over here. You already have 1 touch, 2 touch, 3 touch. I'm expecting that price will come back down to that zone, which is at 5 cents. So 5 cent zone would be your accumulation phase, and you just have to hope that that holds. Remember, it's similar to dropping a bowling ball on ice. The more times that constantly hits, so you have 1, 2, 3, 4, eventually it starts to crack through. It creates little hairline fractures in the ice, and then you start to break through those zones. So something important to focus on. Let's have a look at Bitcoin over here. Okay, Bitcoin price on the high time frame, I am still seeing a bit more downside. Not too much has changed, right? So I reckon at least coming into this box over here, which would be a sweep of the previous lows, around $19,000. And then if that level gets lost, then we go down to 11 to 12K, as I've mentioned before. And I have an important chart that I want to show you around that as well, which is a move that had been confirmed, and we're still waiting for that to play out. So with that being said, I did mention yesterday that those of you that watch, look, I'd give this book. So I said, for those of you who watch the show, I haven't forgotten, I'll find it. And this was the book on risk management. One of the best ones that I watch is called The Art of Execution, how the world's best investors get it wrong, but they still make millions, and it's all down to your risk management. Believe it or not, I've seen people before who have made money at a coin toss. You can flip a coin heads or tails, whether you should go long or short. And if your risk management is on par, you can still make money. Now is the time to be protecting your capital in the current market environment that we're in, bearish market. unless you're shorting, it's going to be very difficult when you're trying to buy spot positions in a major downtrend. Always ask yourself, which way is the trend? The trend is your friend until the end of the trend. And literally, you need to write that down, put it on your trading board in front of you so you can see it every single day. Okay. Before we get into this over here, I just want to give a big shout out to our good friend Jimmy. He solved the problem. Is it still crackling? We're trying to resolve the issue with the sound, so we apologize. It's apparently it's the internet. They changed service providers in our studios, and essentially that's what's giving us all of the issues. Jimmy, should I switch to Wi-Fi then? Okay, we'll stay on the cable over here. Okay, so very important, this chart over here. Let's just give credit to Crypto Poseidon who shared it, and I covered this yesterday. This time is different. There he says it as well. This time is different, and he has the measured move of the bear flag all the way down to 11,786. So what's that? Okay, guys, just a second. Let's switch to Wi-Fi. Okay, I am on Wi-Fi. Just let us know in the comments. How's this? All good? You can hear me, Jimmy?
Yeah, I hear you.
Okay, sound is great. So let's forget this LAN cable. It's obviously ancient technology that's not working for us. So talking about the Bitcoin bear flag, I think a lot of people have forgotten about this. We had the confirmed breakdown of the bear flag. So let's dive into what's actually going on with this thing over here. So first, I also want to confirm this is in line with what the bear flag is saying. And this is the super guppy indicator, which is that whole conglomerate of moving averages. And essentially what this is telling you is that your major support is going to be all the way down in that zone. And we're looking for the third series of expansion. And when you look into markets, you're going to find that oftentimes these things tend to move in waves of 3. So when I talk about waves of 3, I mean we had one major expansion over there, second major expansion, and now we are missing the third major expansion to the downside. Now, short-term traders, look, I personally am looking for a long, just to disclose that to you, and I'm going to show you that trade at the end of the stream. But that's very, very short term. Long term, this is where your eyes should be. You should be looking to the major support levels to the downside, of which those are going to come in. I wouldn't call it major support, but 18, 19K, a little bit of support, 15, 16K, next bit of support, not very strong, probably hit that bounce off, and then major support for some sort of a macro bottom. As much as people want to deny it, it still remains that 10 to 12K area. Now, this is an important site that you can go to. It's called the patternsite.com. So this gives you probabilities and gives you the percentage chance of a pattern or move playing out. They cover candlesticks. It's a brilliant site. They have a lot of things over there. So let's go over the identification guidelines of a bear flag over here. So price trend. It can be in any direction leading to the chart pattern. The shape, it looks like a small rectangle, often tilted against the prevailing price trend. So is that what we have over here? Yes, I would say that's what we've had literally 3 times in a row. It can be like a rectangle, right? You can, if you wanted, you could take this. Let's copy and paste that. Looks like a bit of a rectangle. So angled this way, that's a rectangle. That's a rectangle. This looks a bit like a rectangle, but I changed it more into a wedge. And then we got the confirmed breakdown of that. We had the RSI, which broke also its trend line, and it's confirmed. It starts to go down. You can take a measured move from the pole all the way over here, and that measured move, very similar to that tweet I just showed you, comes down on mine from the confirmed breakdown. Let me make it precise. I'll even lift it up a little bit over there. So that's going to come down to about 12,758. So we have that. With trend lines, price moves between the 2 parallels or near the parallel trend lines. We had that. 3 weeks, flags are short. They're less than 3 weeks long. Patterns are longer than that, are rectangles or channels. Let's see. I didn't even check. I'm checking now with you on the stream. Was this less than 3 weeks? So this is daily, 17 June. Okay, let's say, well, it began about there. Okay, this is longer than 3 weeks. That's probably almost about 6 weeks. I guess it depends where you want to start it from. If you want to start it from there, which is where we started to establish the trend, then it is about still a month. So that one's a bit longer. Okay, what do we have next? The flagpole. I showed you the flagpole. Now, the probability of the breakdown completing is 77%. So 77% will take you straight into that zone at about 12K, and that is probably where I would expect to reach the ultimate bottom. But we are subject to, as traders, you have to change your mind and ask yourself where you would be wrong. And look, I was starting to think that potentially I would be wrong somewhere around this area over here. And the only reason that I gave the benefit of the doubt to the bulls, and I bid every single one of these higher lows, since this one over here was the first one that I bought at about 19K. I bid that one, and then I kind of stopped bidding over here because we didn't get proper higher highs and it looked like it was rolling over. But it's essentially this 34 EMA. This was starting to curl back up, which is what you want to see for a bullish market. And as you can see, we have now lost that level when we broke down the bear flag, and that is now angled down. And that would be my next target. If you are looking for any sort of a bullish push, it would be into that zone over there, about 22,000 to about 22,500. And remember, as each day passes and the longer amount of time that we spend underneath that moving average, the further down those targets become to the downside. So if you're looking for a bounce, what I mean is that target is constantly going to shift as those EMAs start to shift down. And EMAs are powerful, guys. Moving averages and exponential moving averages are super powerful indicators to use because they tend to form strong areas of support and resistance. And I haven't used the EMAs for a while, but I'm going to show you on the lower time frame chart in just a second. Now, what could lead to the ultimate breakdown of this? Well, we have a couple of things going on. Of course, we have the things going on in the EU with their oil crisis and their gas crisis. Then on top of that, we do also have a major economically dense packed calendar week over here. So all of these red, anything that's red, if you go into the Forex factory, is important and could potentially be market moving events. So today we had Tuesday's done. Wednesday, not too much today. Thursday, we have a couple of things. Prelim GDP quarter on quarter. We have the Jackson Hole. This is going to be big. Then Friday, we have core PCE price index month on month. We have Jerome Powell speaking once again, and then Jackson Hole again. So this is going to be very, very important. It all comes down to Friday. And if you have a look at this, I have this marked off. I think let's just quickly double check the dates. Give me just a second. So the 27th, okay, let's see. The 27th is Saturday, which means that Friday is going to be the 26th. Now, if you have a look at this, so Friday is the big economic day with Jerome Powell speaking on the 26th. And then look, I know some of you absolutely love this and some of you frown upon it, but let's put it up. The bear moons. Bear moon. We have bear moon arriving right there on schedule Friday, Saturday. So Saturday will be the official print of the bear moon. Friday is a big economic day. I think there's everything in the making for this bear flag to continue to the downside. Now, I don't want to say that that's going to happen overnight. All I'm saying is that volatility is imminent. Volatility is coming. It's coming very, very soon. Sometime this week, sometime next week, I expect mega moves to come, and you want to be caught on the right side of that move. And so far, everything is telling you that it's more to the downside, right? Look, at this point in time over here, we could argue maybe we're establishing 1, 2, 3 high lows, 4 high lows, 5 high lows. Where's your high low now? Gone. Your high low is gone. You don't have a high low anymore. You've broken that down. There is a new lower low. Now you're looking for lower high, and then your next lower low. You stick with the trend, and pretty much it's better for most of you to protect your cash unless you're an experienced leverage trader and you know exactly what you're doing. You want to scalp the market, and most importantly, you have a back-tested strategy that you can work off. Jimmy, do you have a charger for me? I think this is about to die and it doesn't seem to be working on this one. Okay, while we go into that, I am doing the big mystery box unveil today for OKX. So for those of you who have participated in that, you need to open that up on your mobile app. That is how you open up the mystery box over there. I am going to do it live now. I haven't done it yet. I have to do it on my phone. So I'm going to show it to you over here. So as you can see, let's see. Is that clear? Let me just put let's take this off. The link is in bio over there if you do want to participate in this. Apparently they have awesome rewards in there. Okay, so I'm going to click the rewards button. Okay, click the rewards button. Can you guys see that? And then it shows the Satoshis. Okay, it says draw your prize, which is, because it's in green, it's hard to see, but that should be the mystery reveal. Let's click on that. Draw now. All right, let me try again. Let me screen record this in case this doesn't work. Then I can share it with you. Okay, let's see. Let's see if this works. 1 second. Draw now. Let me see here. Okay, I'll have to screen record it. Nothing seems to be happening yet. Let me try it one more time. Okay, it might be the Wi-Fi that's also interfering. So we'll get back to that one. I will show you guys. I will screen record it and post it on my Twitter. But essentially, they are giving up to $10,000 in rewards. So all you have to do is sign up using the link in the bio, and that will also give you access into the, let's quickly put the stream back on. That will also give you access to the Discord, which is where I drop my trades, of which let's cover some of those trades over here. So look, I'm essentially looking at this. I haven't used the EMAs for a while, and there's one simple reason for that. I usually make my swing trading positions off of the EMAs, but obviously you can see this has been extremely choppy, right? So you had cross to the upside, cross to the downside, cross to the downside again. It's been all over the place. And the reason why is because the market is ranging at the moment. But with volatility imminent, I would err on the side of the EMAs, in the sense that the cross has happened to the downside. You now have price which is stuck below the yellow 21 EMA, below the pink 50 EMA, as well as below the blue 200 EMA. And that means that all the pressure is angled to the downside. You have all your momentum oscillators busy crossing down. And the 4 hour pretty much is talking to those of you who are trading to hold positions for days to weeks. So what this is telling me is that over the next couple of weeks, you can most likely expect that major move to happen to the downside. Now, what would a bullish move look like? Well, if you got any sort of a spike up into this zone over here, again, coming in at about 22,000 to 22,500, you can see your 200 EMA is coming in at 22,600. That is exactly where I would look to go short. And then you're playing it from level to level, expect it to eventually break through that zone and then come all the way down with a fib retracement level. One area of interest that I like over here is 0.786. It's coming in at 19,223, and price has a tendency to often revert back to that level. A lot of people look to the golden ratio, but it tends to be a stop hunt scenario where they're seeking liquidity and most of the stops are underneath, and that creates some sort of a cascade to the downside. So at the very least, I would be looking for a move down to about $19,000. Now, this is essentially the trade setup that I have and what I'm looking at. I have no guarantee that it's going to hit because I probably took the trade for the long a little bit late, but I'm looking for something potentially like this. So a potential sweep of these lows first, which this is going to have to play out today. If it doesn't happen today, it's probably not going to work. Sweep the lows, start to spike up, go into that area. So with your horizontals, you can see the confluence with what I just showed you on the EMAs. So spike into this zone over here. And that is exactly where I'd want to flip short immediately. And when I say that zone, okay, I have posted this in the Discord group over there, but it's long from 20,900 to about 20,775. So 20,775 to 20,900 is where I'm building my long position with 2 orders, long all the way up. TP, if you were in that position yesterday, you may have taken some of the profit and then immediately flipping short. I would add to my short position between 22,850 and build that all the way up to about 23,000. It's all going to depend on the stock market. Everything depends on the stock market. And then I'd look to short that all the way back down. So guys, I think that is just about it for today. Please make sure that you hit the like button over there. Hit the bell notification so you can be notified of any time that I do go live. Subscribe if you're not subscribed yet. And then make sure that you use any one of those links so that you can gain access into the Discord community. And that is it from me. Until next time, I will see you guys on the following video. Stay safe out there and trade well. Cheers for now.